welcome to this report, the 19th of December 2024. I decided to have the report earlier rather than tomorrow morning because I'll be traveling a bit, so I won't have time to do this report. So I figured out, let's just send it out tonight and let's see. Okay, so as usual, let's move on to the fundamental news first. Now, today I want to cover a bit about the Federal Reserve interest rate report, right? Overview of the Federal Reserve recent actions. The Federal Reserve announced a 25 basis point reduction in interest rates yesterday, bringing the federal fund rate down to 4.5%. However, the central bank signaled a new strategy to slow down the pace of rate cuts moving forward. Now, from a historical context of interest rates, while the current federal fund rate appears moderate in a historical context spanning over 50 years, it is still relatively high when considering the trends of the past decade. Updated projections from the Federal Reserve. The Fed released its updated summary of economic projections, which I've already mentioned in previous report. It is very, very crucial during the meeting, and the key highlights include: one, revised projections for 2025. September 2024 forecast, federal fund rates expected to decrease to 3.5% by the end of 2025. However, when it came to the December dot plot, right, it's the projected rate is now 4%, indicating a longer period of elevated rates. So what it's saying is that in September, they expected a 1% cut next year. But right now, with the December update, they said we are not looking at 1%, it's going to be 0.5%, right? So number two, market expectations prior to meetings. Now, according to CME Fed Watch 2, there was a 98.6% probability of a rate cut at today's meeting, and that happened, right? So for the next Federal Reserve meeting on January 29, 2025, there is a 93.6% probability that rates will remain unchanged. Now, if you see from both probabilities, the moment you have a 90%, even it goes above 70%, the chances are very high. We will see whatever the probability that is being predicted happen. So right now, chances are very, very high that we would not see a rate cut come January. Now, for the inflation and Federal Reserve challenges, the Fed's primary goal is to reduce inflation to its 2% target. Although inflation, as measured by CPI and PCE, has declined from its peak, it remains above target levels. Lowering interest rates is generally seen as inflationary, posing a dilemma for policymakers. Now, what's the justification for rate cuts? The Fed cited concerns over potential labor market's deterioration as a rationale for today's rate cut. The unemployment rate increased slightly from 4.1% to 4.2% last month, which the central bank referenced to justify its action. Now, what are the broader implications and speculations? Now, some analysts argue that the Fed's action may be driven by broader economic concerns, such as pressures in commercial real estate markets, in banking sector stability, and federal debt management. Additionally, market participants remain skeptical about the Fed's ability to maintain its current narrative. Open market interest rates have begun rising, reflecting expectations of renewed inflationary pressures. So end of the day, what's the conclusion? I think that's the most important thing. Now, the Fed's projection for 2025, 2026, and beyond should be viewed with caution, as they are highly contingent on future economic data and evolving conditions. Any unexpected shift in inflation trends, labor market dynamics, or global economic factors could prompt the Fed to adjust its course. Okay. Additionally, potential policy changes under the next presidential administration may significantly influence the central bank's approach, introducing further uncertainty into long-term interest rate forecasts. For markets, this underscores the need for adaptability, as evolving US monetary policy will ripple through global equities, currencies, and economic sentiment. Okay, so hope you can understand the simple sharing today.